Welcome everybody back to the monthly update with Johnston Grocke. We've had a bit of a hiatus, haven't we?
Yeah,
We've had some time off. I'm sure you all wanted to switch off over Christmas about finance because we sure did. Well, maybe not John, but I know I did. So we're back into it. So I'm going to throw to John and he's going to tell us what's happening in his side of the world.
Good, Rhiannon, thank you. And welcome back, Andrew and Rhiannon. And it just seems like we're already well into the year. It's just gone so quickly. We're in very unusual times, as the Chinese proverb goes. But I think there are a couple of things we can just draw on in terms of background at the moment to give people some understanding of what's going on. There's a lot of uncertainty at the present time, and I don't know that anyone's really confident about exactly how things will look when the government start to withdraw their stimulus, JobKeeper in particular. There are certain sections of our economy at the moment who are actually saying, look, please keep it going. And the government seems to be looking at targeting perhaps a few very specific sectors and withdrawing it elsewhere. It has been, that underwriting of our economy by the government's been essential. It's been very good. What happens when they withdraw it? Question mark. Vaccine, I think it's really positive and the markets are going to respond positively and probably already have factored that in. So the vaccine's a good thing. A lot of people are going to be more confident about moving around. Thank goodness we're in Australia and particularly Adelaide, South Australia at the moment. Interest rate environment, it's interesting, our Reserve Bank came out and said, look, nothing's going to change until 24. I'm not sure that 24, it's a long time away. There's already a change in our bond market. Bonds have risen from 10-year government bonds in Australia and the US, but in Australia, have risen from about 0.7 in August to nearly touch 1.3 yesterday. Very significant percentage change. 10-year bonds are a flag of pending cost of money for government changing in the future. Not necessarily straight away, but that's a reflection on potentially some inflation creeping in as well. And in talking to some of the people that we work with, deal with as clients, there's definitely disruption to supply, and supply inflation is probably something we're going to see where prices get pushed up. The last thing I'd say is that markets are in euphoria at the moment. The fundamentals really have been pushed aside. The fact that we've just got cheap money has meant that lots of money is going into markets. Interest rates at historic lows for centuries, and the best place to get an income is in the market. If you're reliant on an income, make sure that you've got a pot of money that covers at least 3 years of your income, because we're going to go through a very volatile period over the next 12 months. Thanks, Rhiannon.
I have two questions. So
Sure.
You heard it here first. You're thinking that the interest rates may rise against what the RBA have said.
My comment would be, I don't know, and I don't think it will rise in the immediate future, but 10-year government bond rates are always a leading indicator as to the direction of interest rates. And the bond market is 5 or 6 times the size of our share market, so it's a very substantial influence on our economy. It has been very much suppressed by government globally to make sure that economies survive. I don't think whenever someone comes out and makes a statement that's 3 years in advance, it's a big statement. So I don't know. I don't know, but I suspect there's going to be perhaps external pressures at some point that might change that.
Okay. My second one, which is quite viral at the moment, is GameStop. Can you just quickly give us, because I know it's trending, so I know a lot of people probably want to know about it.
GameStop's a good example of institutional positions in a company where historically the way the market works is if a large institution fund manager feels that a company is really not healthy financially, they effectively short the stock. Now what that means is they take a position or a bet that the stock's going to fall in value. What happens, unfortunately, is if the stock goes much higher, they eventually either their position goes to zero or they have to buy the stock. So it's almost self-completing that the stock goes rapidly higher. So a cohort of people on social media decided, after looking at which was one of the most significant shorted stocks in our market globally, I reckon we can take a position in this and put pressure on the institution, fund manager, that's actually got a position to say it's going to go down. And over $1 billion was lost by that financial institution. So whether that will continue to be possible, I think regulators are now looking at this and saying, look, is that normal market behaviour? Some would argue perhaps not. And it's the fact that there's a lot of liquidity, cash around, and people can just do this because it helps fill in the time. So I think very interesting outcome, very very volatile for GameStop holders because it went up and it went down.
Okay. Well, thank you, John.
Fine,
Thought
sure.
we should cover that. Now, Andy, are you going to have anything as interesting as that?
Well, we'll see, won't we? It's interesting, John, talking about supply. I do believe there's a supply cost risk, and that essentially means inflation hitting supply and supply chain. So freight from overseas, as an example, has been restricted in that you can't build a boat immediately. It takes a while to build an ocean liner and put freight on it. So demand for freight has increased by, cost-wise, approximately 2 to 3 times. That cost will be passed on to consumers. So there's an underlying issue about inflation there. The other thing I want to mention is that we've seen quite surprisingly, I think, across Australia, a strong property market, and especially in Adelaide, it's been very surprising, despite the risk of COVID. So perhaps that's come from people saving, people looking to invest their money elsewhere, perhaps because of low interest rates, not going to the bond and the term deposit market, looking at property, driven prices up. But what else has actually probably influenced that greatly, we think, is the supply from overseas money, plenty of liquidity from intergenerational wealth transfer from perhaps China and India, where grandparents are funding their grandchild's university education and they've got to live here. Money is coming in quite significantly in Adelaide. Again, property doesn't expand to fill that supply quickly. There's been a huge demand. Prices have gone up significantly. As you can see, there's a lot of shortage of stock. People are holding on to stock. Prices going up. So I think we're seeing some quite high inflation aspects on the cost of housing.
Andrew, could I just bounce off of that, because there's a really important human characteristic behind this as well, and it applies to the share market also. It's called FOMO, which is fear of missing out.
I'm surprised you know what that means. But I'm impressed. I'm sorry. I'm really impressed.
I'm not that old.
Oh, okay. So fear of missing out on...
Fear of missing out on the upside.
Yeah.
And
Absolutely.
there is definitely an aspect to that where people are acting emotionally rather than rationally.
Properties are going onto the market and being with an asking price and actually being re-rated upwards, not downwards but upwards. So there's actually a pressure on property prices.
Thanks for that, Andy. That's a nice segue into what I deal with. I'm going to make this short, sharp and shiny. Vals are coming in low. So about every second application that we have, vals are coming in low because of what we've just spoken about, because those house prices have gone right up. The valuers are saying that
Is overcooked.
Yep,
It's overrated.
exactly.
Yep.
Banks that are offering cashback offers at this time, their timeframes have blown out because everyone wants to get that cashback. Banks have tightened policy regarding self-employed income and new jobs. So historically, you could have been in an industry for a couple of years and then start a new job and have no problem getting finance. Pretty much every bank now wants you to be there for 3 or 6 months. And with self-employed, banks are now starting to want to see BAS. Historically, they haven't needed to see that. And most banks now are needing your 2020 financials done, even though they don't need to be done till May.
A lot of them till May, but
yeah,
generally I understand.
Now the bank wants them done now. Timeframes are still really, really long. Even though COVID doesn't really exist here in Adelaide, it still exists in other countries where they outsource a lot of their work. And the market is that busy that the banks just cannot keep up. One reason we're seeing that people are purchasing as well when they normally haven't is travel. Especially a lot of people in my generation like to travel, and they've put the house buying on the back burner. Now they can't travel, they're looking at purchasing instead. And with the first home loan deposit scheme, the government has released some new spots, and that's for new and established properties, and I think that's finding a lot of extra people entering the market as well. So that is when you have a smaller sort of deposit and the government goes guarantor for you instead of your parents.
Rhiannon, can I just ask one last question on that? Do you feel in what you've seen that eventually that leads to price appreciation and people simply end up transferring the extra support they're getting from the government into the price of the houses?
Yeah, 100%. Yeah,
there you
absolutely.
Go. Yep.
Absolutely. And the builders with the $15,000 rebate that you get for renovations and constructing a house, I know, because I've got people I know in the industry, the trades are just putting their prices up and the builders are just putting their prices up. Sorry it was a long one, but there was lots to cover. If you have any further questions about anything we've spoken about today, please feel free to call our office and have a chat with one of us.